But let's get a deeper sense of what we can make of our market right now. What's the outlook going ahead, the trends that are looking good in the market right now. And to discuss all of that, we have Mr. Deepak Shenoy, the founder at Capital Mind, joining us. And good afternoon, Mr. Shenoy. Always great interacting with you, and thanks so much for joining us on this show. First up, just want to get your general sense on the market, because after the kind of carnage that we've seen on D Street, we have seen a little bit of a recovery. Do you believe that this recovery is now only one-sided? Are we headed only onwards and upwards from here? Or do you believe that this recovery, the pace at which it is coming right now, is a little too fast and we could, slip a little from here once again? What's the outlook?
So I think there's a good chance. This is like the Ravi Shastri answer of all three results are possible. But really, we have a big event coming in a week or so, which is the tariff announcements by the US, potentially other things that go with it, repercussions of what has happened in the past with aluminum and steel tariffs in the US impacting US inflation, Canadian tariffs affecting Canada and US accordingly. I think a lot of these impacts are yet to be seen. So I wouldn't be overjoyed by the markets going up just now. I think it's a normal phase when markets, they fell about maybe 20%, but that's about it. It's not majorly, in fact, what used to be a common occurrence every year, 25 to 30% falls, is happening once in 4 years. That's why we're a little surprised, but this is how markets should behave normally. Markets are up about 8 or 9% in the last 1 month or so. So it's kind of rebounding back a little bit, and that's also normal. I don't think this is anything out of the ordinary. I will not, hesitate to say this. As many events that are happening globally, as these events unfold, I am sure the market will see both upside and downside volatility. It may be a little too early for us to say we're out of the woods from an economic perspective, but we're certainly seeing some changes that were not evident earlier, some buying by FPIs. The dollar has now reached 85 rupees 80 paisa from 87 odd rupees just a week back. So, there is some kind of balancing out of almost all of the other economic things. And then the Indian rupee 10-year bond is at 6.62. I think it's a multi-year high now in terms, or multi-year low in terms of the yields. So I think there is some kind of economic stability as well in the Indian context. So I think, yeah, things are slowly improving on the ground. But with the specter of tariffs coming in and their implications on India, I think it's too early to say it's all over and it's all behind us.
Right, Mr. Shenoy, this is Sumita. I'm coming to you live from our Delhi studios. Let me ask you a follow-up question on the specter of tariffs as you expressed it and explained it. We were just having a chat with another market guest, and he was of the opinion that he's rather bullish about the long-term India story, about the near term as well. There's not going to be much correction because of the fact that both the sides, the United States and India, have taken a negotiating approach so far as the issue of tariffs is concerned. They are now negotiating on an FTA, which they expect to close by the end of this year, and a bilateral trade agreement, which both the sides have been saying. And in fact, MEA just last week was also stating that they're looking at a mutually beneficial bilateral trade agreement. So would you agree with that point of view, that there's nothing much to really worry about?
I would say that you can say there's nothing much to worry about after it has happened. Before it's happened, what are the chances? I mean, honestly, America is not the contours of the world trade economic system has changed, and I think it's been changing for the last few years. It's just that America is now doing what perhaps it would have anyhow had to do in the next few years, which is to reduce its reliance on international trade, because it's no longer as big a player as it used to be in the past. It also will reduce its influence in terms of being the only reserve currency overall. That's just a natural consequence. It's just you can't be less important in trade and also hold the US currency, world's reserve currency. And this is a natural response. So how much the tariffs will be and what will the contours be, I don't think it's going to be meaningful to estimate now and say that it won't be big. I think it could be as big as they want it to be. It could be, it could have ramifications on stuff they haven't talked about till now. For instance, they haven't talked about services. What if suddenly they start doing something about that as well? Or if they start increasing withholding taxes or tax in some way foreign holders of US debt. They've been talking about it recently, about how they want to tax those inflows. So it could take many other rules. I think personally that while India is such a small player that it won't get impacted meaningfully because they're like $75 billion of exports, $45 billion of imports, so net 30 billion. It's not even worth America's time to spend too much time thinking about us. We'll probably get slotted with, oh well, how much does India tax us? We'll tax them equally back. That's pretty much what I think America will do. But in general, I don't think this is a meaningful. I mean, this will not be meaningful for America, but it could be meaningful for a few Indian companies that export, specifically pharma, perhaps chemicals, and so on, where a large part of revenues are exports, and these guys are fairly big companies in the Indian, market cap context. So that is when you'll really see the impact. I don't think I wouldn't say say it's I think it's too early to say it's nothing's going to happen, because let it happen and then we can say that.
So it's not all hunky-dory, Mr. Shenoy. Some sort of caution really persists so far as that tariff threat is concerned. But Mr. Shenoy, India, some industries or some sectors, for example, the electronics sector is looking at a zero tariff structure, which could also solidify domestic manufacturing as well. So on the back of all of these developments, what range do you expect Nifty to move into over the next 1 month?
So to your earlier comment, I think I'm more comfortable talking about a 10-year time frame where I think India will do really well. Perhaps even because of these American tariffs and changes to international trade, because India does not need to be subservient in an international trade scenario. It is very small, but it has a very large internal market. And if our internal market keeps growing the way it is, we are going to be a significant market going forward. And because America is forcing a lot of countries into domestically managing their own economies, and therefore every country cloistering itself around with tariffs and with maybe non-tariff barriers as well, India is going to eventually try to manufacture more and more for itself. And I think that's going to be fantastic for our markets. We will see a lot more companies list, a lot more companies come up, lots of very interesting things to happen in the next 10 years. The next 1 month, it's like, you might as well take a coin and call heads or tails and, do this, because there's no guessing in the 1 month phenomenon where markets are going to be. It's not even our job. My job is more like to look at, long-term trends. And then you start picking up companies early when they start making those trends. I think semiconductors is one story where India will do really well. It may not be the current players that shine, but I think the current players will also do pretty well overall. Even if they're not at the cutting edge of that technology.
If you like this video, then like, share and subscribe to ET Now.